Welcome back, traders. This is Wilms with another Forex Bootcamp training. I'm going to go over charting, how to chart, and what I look for in the chart. Hopefully you guys will get value out of this video. That way you can copy it or add it to your trading strategy when analyzing the market, of course. Technical analysis is all about charting everything, but you want to also add fundamental analysis as well. And by what I mean by fundamental analysis is also reading the news about the pair, what's being said in the news, and anticipate how positive news can affect the market and how negative news can affect the market. Of course, when it's positive, the market goes up. When it's negative, the market goes down. So, but you always want to be ahead of everybody else. So you want to, make sure that you set your plan according to what you review in the news. So with technical analysis is one of the things I focus on. I also focus on reading the candlesticks, and because the candlesticks will tell a story and it'll give you direction. I also ask myself a series of questions before I jump into a trade. First question, of course, is, okay, is the market in an uptrend or a downtrend? The second question is, is it ranging? If it's ranging, I want to stay out of the market. If it's consolidating, I want to stay out of the market. I just want to go with the flow of the market, which is if the market is trending upward, I want to make sure I get in on a pullback. Okay, that way it's like if you go to the beach and you're a surfer, of course you want to wait for the wave to pull back, and then when it starts to move forward, you want to get on your board and then ride that wave into the shore, okay, into the sea, where the sand area is. So think of trading that way as a surfer. You could watch some YouTube videos on the thought process of a surfer, and you'll understand exactly what I'm talking about when placing a trade. So you want to always place a trade on an uptrend. When it's going with the flow, you place a trade with the flow, and when it's in a downtrend, you want to place a trade going down. And then some people say, well, can you trade both ways? Well, yeah, if you're skilled enough, you can ride both waves, but you want to solidify that you understand what way the market's going, because if you don't, the market will then take you out to lunch, so to speak, and then you're forced to restart a new account. You don't want to lose your account. So one of the things you want to focus on when starting your trading career is risk management. Risk management is more important than actually placing a trade, believe it or not, because you want to protect your principal. You want to know exactly how much you're willing to lose when placing a trade. That's important, because if the trade goes against you and it hits your stop loss, then you can recalibrate and review that trade to see where you went wrong. Okay, so always place stop losses when placing a trade. It could be a $10 stop, it could be a $20 stop, 30, 40. You have to determine before you place that trade, how much are you willing to lose if the trade goes against you. Okay, so looking at the chart, the very first thing I ask myself, of course, is the market trending? And if it's trending, is it trending up or is it trending down? So let's dive into the content. Before we dive in, I invite you to subscribe to the channel, hit the bell button, that way you get future notifications of when I upload videos like this. So looking at BTC USD, this is Bitcoin against the US dollar, and the market's live right now. As you can see, the ask and the bid prices are showcasing on the right side here. Now, if you don't already have a charting platform, I would definitely encourage you to get tradingview.com. Is available on my website, the clickable site there. Of course, if you subscribe to TradingView and you upgrade, I get a referral commission if you do so. There's another way to support me and this channel. So, but it's free. It's free unless you're willing to, upgrade and get more bells and whistles. The free version gives you ads on the bottom left, which annoys me. That's why I have the paid version. So, but yeah, you want to get TradingView. This is one of your tools that you'll need before executing your trades. All right, so let's go ahead and dive into the content. So basically, this is the monthly chart. Okay, what I look for in the monthly chart is, okay, what's the market doing? What's it telling me? What are the candles telling me? Is number one, are we in an uptrend? So I can put my trend line from the bottom. I'll start from like right here all the way up to the top to right there. And I kind of make sure that a couple of wicks, 1, 2, 3 wicks hit the line. That way it gives me an idea. If this is the trend line, as you can see on the pullbacks, the actual candle bounced off the trend line and was trending higher. Okay, so that's one of the things you want to focus on and mark out. So let's go ahead and mark that out with a path. So if it started down here and it went up here, it came back, hit that trend line, bounced off, create a higher high, right? And came back to the trend line, made a higher low because this low is higher than this low. So you mark that. And then it went up, created another high, and then it trended, right? It went pretty much right. So you can do this. It went right. And then when it got to that candle, it started trending lower. But look what happened. Instead of bouncing off the line, okay, it went straight through the line. All right, which means there was a market structure shift. Okay, then it came back, hit the line, and then started trending lower. All right, so this is where we are in the market. Okay, according to what I just shared with you, this shows you that the market is on a downtrend, right? But we have to focus on the last candle before we make any decisions of whether or not we'll get into the market or not. Because to tell you the truth, you don't necessarily have to get in the market unless you see your setup. An A1 setup is one of which that if it hits your parameters on your trading plan, that's when you will execute the trade. If it doesn't hit your parameters, you don't take the trade. Okay, so taking no trades is also a trading strategy, right? It's like, okay, I need to see X, Y, and Z before I actually place a trade. All right, and then that's what I'm going to share with you on this video. It's like, what do I see that would help me decide whether I should enter or sit on my hands? All right, so so let's go down to the lower time frames to see what's going on. Okay, so the reason why I say, before we go into the lower time frame, the reason why I say there was a market structure shift, and please write that word down, market structure shift. If you look on the left side here, the last left before the high, the last low before the high, this candle right here, if anything goes below that candle, you have a market structure shift. So, and you can chart this out on every time frame. You take the lowest candle, okay, the last low before the high, and you mark that out. And you say to yourself, if anything breaks below that particular candle, and then it's called a market structure shift. Okay, so we're going to leave that line here and see what it says on the weekly candle. Okay, so we're going to drop down now to the weekly candle. Now, on the weekly candle, as you can see, everything is now bouncing off the trend line. This is your trend line. Okay, we have a market structure shift, which is if you adjust it to the lowest candle right there. Okay, eventually what happened, what did it do? It broke lower than this candle, hence creating a market structure shift. And what it's doing is going back, right? Going back to either hit the line or go back to the fair value gap. Okay, now a fair value gap, of course, is a gap between three candles. You have 1, 2, 3 candles where this Wix candle, and I'll make it bigger, this wicks candle and this wicks candle is not meeting, but yet there was so much momentum that this middle candle separated the two. Okay, so what the market has to do eventually is come back and fill that gap, because there's some orders that were left over that were not filled. So we're going to mark that out. Okay, so let me get this tool here. Right here. We're going to mark this fair value gap, right? That's our fair value gap. Now we're in. All right. That's the fair value gap. So we're looking for the market to come back into this gap, okay, and continue its journey going lower, right? But we also got to take a look at the Fibonacci tool. So we're going to pull out the fib, and that's this tool right here. Fibonacci retracement. We're going to click on that. We place the fib on the most recent high, which is this candle right here, right? Stretch it all the way out to the bottom of this black candle right here, and all the way to the end of the wick. Stretch it out, and we see that right where 61.80 is where the fair value gap is. This is what we call the sweet spot. Okay, it almost lines up perfectly. Okay, but the market may bounce off the 61.8 and trend lower. It may bounce off to 38.20, trend lower. It may bounce off to 50 or 78. So these are your sweet spots pretty much. You want to pay close attention to see if the market will bounce off these levels. So it looks like the market did come up and went past the 38.2, and now it's lower. So we have to decide whether or not the market's going to continue to go to the 68.8 or bounce off and go below, right, the 38.20. So we marked up the fair value gap on the weekly. Okay, now we're going to drop down to the daily. So I'm going to take this off. We already got our sweet spot, so now we're going to drop down to the daily. Okay, now daily, it's pretty much telling us that, okay, this area that we marked out is a fair value gap area on the weekly. Okay, now if you do a deeper dive into that area, you'll also notice that there's a fair value gap within the daily, which is right here. All right, so you can create another box, color it some different color, and say, okay, this is a fair value gap as well. We're going to put in fair value gap. Okay, and this is a fair value gap, right, from the weekly. Okay, but look what happened. So we see the market now is trying to either go back up to the fair value gap, or it may trend lower. So we just have to find out what's going on here in this general area, because the market's making higher highs, right? So we got to drop down to the lower time frames. Now I'm going to stop here and say, okay, now we got to, since we on the daily, right, I want to mark out yesterday's candle, which is Friday's candle, and I'm going to mark out Friday's candle, and it's going to give me the direction of the market. Okay, so I'm going to take this box, take this candle here, which is yesterday's candle, which is Friday's candle, stretch it out. Okay, stretch it out. Now the color, I really don't matter, it doesn't matter the color, but I put a line right in the middle. Okay, all right, but I'm gonna mark the high of that candle. Change the color to, let's say, this color here. Make it thick enough for me to see it when I go down to the lower time frames. So I'm gonna get that line again, horizontal ray. That's what it's called. Yep, horizontal ray. And I'm gonna mark the middle as well. Change the color of the middle candle to the same color. And make that 4 as well. And I'm just gonna take off the box. Okay. Now, the high and the low. Okay, so the market got this high, the market got that low. And then the middle is telling me whether or not I should consider getting in the trade, right? Because whenever it's in the middle, it's like really not giving you a direction. It's consolidating in the middle. So you pretty much want to watch it. When the market's down here, if you have candles that are towards the low part of the candle, you look at taking up, bullish trades. If the candle's up here, there's a lot of candles up here, you look at taking bearish trades. But right now it's in the middle. Okay, so the next thing I want to do here, okay, make sure that I got my levels correct here. Okay, I'm going to drop down now to the 1 hour, and I'm going to mark. Okay, I'm going to mark an area above and below. Okay, so we have this long wick. I'm going to stretch this box to touch the top of that candle right here. Okay, and then I'm going to do the same thing. I'm going to clone this box and bring it down to the bottom. Okay, so this is telling me my sweet spots. Okay, some people call it supply and demand zones, but what I'm looking for when I create this area, I'm going to change the color. Okay, I'm looking for a break of these zones. So it may not happen today, and then I'm going to set alerts to remind me of those breaks. So you set alert above and you set an alert below. Okay, this is why I say set alerts, because remember I said when it's in the middle, you really don't want to place a trade because it's consolidating. As you can see, it's going right. It's not making any higher highs. It's not making any lower lows. Okay, but if I see a candle, okay, I'm gonna get this tool here for you. If the candle trends like this, right, and breaks above the high, okay, what I'm looking for it to do, and I guess I could put a box there as well, just to show you that if a candle closes above this line, I'm looking for buys. Okay, I'm bullish at this point, because what I wanted to do is to come back, hit the line, and go above it like that. Okay, come back, retrace back into that line, okay, which is the high that we marked off, bounce off that line, and continue its journey going higher, okay, towards that fair value gap. Because remember, the fair value gap is above us. Okay, see, this is a fair value gap. That's what I'll be waiting for. Okay, but if the market does one of these numbers and goes below this line, which is the low that we have, right? I'm gonna take that box, I'm gonna clone it and bring it down here. Now if the market does this, I'm looking for it to come back to this line and continue its journey going lower. Okay, so we're at a crossroads, right? We gotta wait. Okay, half of trading, more than half, is patience. You have to have patience. Okay, so with patience, this is where everybody's like, oh, trading can be boring because you have to wait, right? But you have to wait. You have to be patient. Two things have to happen before you actually place a trade. This is why a lot of traders are unsuccessful in placing trades. They're not patient enough. Okay. They don't have a set strategy on paper that will dictate what their actions are going to be. Okay. So that's why you got to write that stuff down. You got to mark out your chart. You got to put in your trading plan. If this happens, and there's two scenarios, right? I'm not going to place any trades while the market is consolidating and going right. It defeats the purpose because you're not going to make any money. It whipsaw like a seesaw and stay within this area, and there's no trade there. But the trade is when the market breaks the high of the daily or breaks the low of the daily. So that's why we wait. This was the Friday's high, Friday low, and we're in Saturday, right? So will it happen today? Don't know. That's why you got to, number one, you could take the high, all right? Take the high, get its coordinates. You double click the line, get its coordinates, copy the coordinates, right? Go over here on the right panel, hit the alarm clock. Then you're going to add an alert to come back to the chart. Once the alert hits, crossing up above the line, you want to be notified. Okay, that way you can go about your day and not be in front of the charts all day. So I set an alert to remind TradingView that if the market goes above this line, alert me. Then I'll come back to the chart to see if there's going to be a candle, a bullish candle, right? A momentum candle. All right. And then a pullback. I'm waiting for that pullback to hit the line. And then I'm looking for a bullish engulfing candle or a doji, right? A bullish engulfing candle that's above the candle that closed, right? If that candle, and I'll mark that candle out for you. Okay. We're going to copy this candle, right? See if I can grab it. I might have to draw it again. Can't grab it. All right, let's draw it again. Okay, so if after that pullback we get a candle that's bigger than the previous candle, all right, might get bigger because it's going to be a pullback, right? So let's say this is a pullback candle. Okay, and we'll make that candle black. Okay, if this is a pullback candle, right, and it created a wick up top, of course, but if it came back and touched that line, and the very next candle is bigger than the candle previous, this is called a bullish engulfing candle. And then on the closes of this candle is when I would place my trade. Okay. So in the very next candle, you got to wait for the close of this candle. Okay. Because that's when you'll know whether or not it's a bullish engulfing candle. So when this candle closes, I want to anticipate getting into the market on the very next candle. And that would be a long position candle. So I'm going to get in on the top of that candle, stretch my stop loss below the line, about midway. And I'm protecting my principal that if it goes against me, I'm not going to, lose the account or lose a lot of money. Just setting a portion of of my account at a set loss, right? And then I'm going to stretch this out for a 1-to-1, and then set it and forget it, and then walk away. Okay, so I'm going to enter on the very next candle, and let's say that next candle, let's clone this, happens to be this candle right here, right? On the very next candle, I'm entering. I'm setting my TP up here, take profit, and I'm setting my stop loss down here. Okay, I'm going to make that candle, that line red. That's my stop loss. And then I'm going to make this candle green. All right. And then I'm just going to wait to see, with time, of course, what this, what the market's going to do. Okay. This is my scenario. Will it pan out this way, hit my take profit? I don't know. But that's the strategy, right? Is to get in on the next candle, set your stop loss below, and then you take profit above, and you set it and forget it. Okay. Who knows how long it takes? It may take a couple of minutes. It may take a couple of hours. It may take a day or two. But I've already set my parameters. Now, you don't ever change your stop loss, and you don't ever change your take profit. Okay. So, because a lot of traders, they think, oh, I want to stay in a trade, I'll move my stop loss lower. Don't do that. Or I want to maximize on the market and move my take profit higher. Don't do that, because when you do that, the market may deny you access to that profit, and then tanks, right? And then you're like, wow, I was like 1 pip away from getting that profit, right? Because you moved your take profit. It may do this. You might say, oh, nope, and I'm going to go down here and hit your stop loss. And then you're out of the market. Where you were in profit, but you got greedy, okay? You don't want to be greedy, and it goes against you and hits your stop loss, okay? Trust me, happened to me many of times in the past. Okay, so that's one scenario. So the next scenario, I didn't want to take that off. Okay, it may trend up. It may get close to your stop loss. It may want to retouch that line. It may want to do anything it wants to do, and then eventually hits your stop. You take profit. It could do that. Okay, or that's one scenario. So the market is very unpredictable, but all we could do is trade based on probabilities. So you may do this, and then boom, hits your stop loss. Okay. Yeah. And that's the risk we take. Okay. So that's why you always set your stop loss. You have to set in yourself, okay, how much am I willing to lose on this trade? And always trade based on pips. Pips is basically how much you're willing to risk in the market. And you just place that trade. If you're practicing in your demo account, practice with 0.01 lot size. Okay. Do not take any live trades until you master the demo account, that you become profitable in a demo account. You got to be profitable and then you're consistently profitable. Okay. Over time, that's when I would recommend you start or get into or set up a live account. But right now, just create a demo account. TradingView allows you to create a demo account. It's called a paper trade. Okay. And then what you do is, once you get here to this part, you can say, okay, you can create a new demo account. Okay. So if I log out, well, I'm not going to log out, but there'll be a button here that says create a new demo account. Okay, and then you name the demo account. Okay, like right here, create account, and you name it. As you can see, Metro FX is the account I created. Okay, and pretty much you just trade this account. Okay, yeah, there's some losses, and again, you're gonna get losses, but it's not real money. Okay, it's fake money. So you just, practice. Okay, at one point I had the account over 100,000. This was a $100,000 demo account. Now I'm negative 33,000, which is okay. All right, because I know I can bring it back up, and that's the confidence I have in myself over time that I can bring it back up. Okay, so I normally practice on the demos, or create a demo account to test my strategy. Okay, but this is a brand new strategy that I'm sharing with you on this video, okay. So going forward, this is how I mark up my charts. Okay, and just to recap, okay, I start with the monthly and we drop down to the weekly. I mark up the high and the low of the daily, all right, and then put a line in the middle, and then I go down to the hourly, which I'm at right now, and I'm plotting out a strategy, right? I'm looking for a couple of things to happen. That's why I created these red lines here to remind me that, hey, if the market goes below the low of the daily, I'm looking to enter the market for a sell. Okay, if the market continues to trend higher, I'm looking for a break of the high, which is this orange line, and now I'm bullish. I'm looking for a buy. Okay, now I'm going to take this stuff off. All right, now the execution is down in the lower time frames, usually in the 5 minute. Okay, so you'll drop down to either the 15 or the 5. Let's drop down to the 5. Let me take this off. All right, so let's drop down to the 5. Okay, and the 5 minute is when the market gets to that area based on your an alert. And let's go back to the 1 hour, because I forgot to. I'll take all this stuff off to set an alert to remind me for when the market is trending lower. So I'm going to double tap my orange line on the bottom, get its coordinates, copy and paste it into my alerts, into the alert section, crossing down, and then I'm clicking value and I'm pasting the coordinates right in there. Create. Now I have 2 alerts here, so it'll alert me via my computer, okay, via email. It'll send me an email, let me know, hey, the alert you set has been triggered. And then at that point, I come back into the market. I open up my charts on TradingView. I open up the chart again on TradingView, and I'm looking for those, traps, right? Looking to get into the market based on those lines you saw. All right. So then you would drop down to the 5 minute after getting the alert. You drop down to the 5 minute. Okay, and you just patiently waiting to place a trade. Okay, because like I said, it's right in the middle, so you don't really want to be trading when it's in the middle. You want to wait for it to come down to the bottom. If it breaks, you're looking for sells. Okay, but if it doesn't break, it may bounce off the line and trend higher. That's another thing you want to keep a close eye on. Okay, that like I said, 2 things can happen. It could break the line, then you place sells. It could bounce off the line, then you place a buy. But when it bounces off the line, you're looking for what? A bearish engulfing candle. If it breaks the line, you're looking for a reverse. If it breaks off the line, you're looking for a bullish engulfing candle to trend higher. If it goes beyond the line, right, breaks down, then you're looking for a bearish engulfing candle. Okay, hopefully that makes sense. Same is true on the top. If it breaks the top line, which is an orange line, and creates a bullish engulfing candle, you're looking for buys. If it bounces off the line, you're looking for a bearish engulfing candle. Then it'll give you a sign that it want to trend go back down to the orange line. So put that in your notes. Okay, so this is for Bitcoin. So the same setup is what I do on every single one of my pairs. So we can do the same thing on gold. So let's go to gold. Okay, we're gonna go to gold and we're gonna mark up gold. Okay, I'm gonna erase everything because I previously marked up gold, but I'm gonna do it with you guys live. So what do? We start with the monthly. And we're asking ourselves a question, right? Is it trending? If it's trending higher or lower, right? Right now we don't have any black candles on the left side, but we have this huge bearish candle on the right side. But we don't know exactly what's going on, right? But what we want to do, of course, the first thing is put our trend line from the bottom to the top, like this, making sure that a couple of the candles are touching the trend line. All right, so that's the first thing we want to do, because as you can see, it was trending higher, and then we have this bearish candle breaking or crossing over the trend line. So something's happening, right? It could be a market structure shift, okay? Because now it's a black candle. Black means it's going down. So that's the first thing we want to do. So the next thing, go down to the weekly and see on the left side which candle, this black candle right here, which candle is the lowest candle on the lowest, and which candle on the left side is a black candle and it's the lowest candle. All right, so a bearish candle. So that candle right there. So we're going to mark that candle. It's low, or the body low. We're going to make it red. And what do we have? We have a break, right? A cross over that red line. Now is what we call a market structure shift. We're going to label it market structure, market structure shift. All right, I'm going to put that on there because this is where the market changed right here. It was trending higher, it was above your trend line, and now it's trending lower because it crossed your trend line and it changed the structure from bullish to bearish. Okay, from bullish to bearish. All right, now this is the weekly. Now we're going to drop down to the daily. We're going to drop down to the daily, and we see the same thing occurring on the daily. Okay, now we already know it's a market structure shift, but which is that black candle right here. So we're going to have to adjust. We're going to have to adjust and put it below that black candle right there. Okay, because the market broke below, retraced back, and then made another low. Confirmation that the market has shifted. Okay? Because usually when there's a market structure shift, there's a pullback. Okay? This is where the market structure shift was. broke it and pulled back. Okay, and again, if we take our Fibonacci tool, you'll notice that if we go from the high of that to the bottom of this, and we stretch this out, where did the market pull back to? 78.60. Okay, and then bounce right off of that. No, that area. That's incredible. That's incredible right there. So had you had an opportunity to mark this up before this happened, you could have rolled this whole trend going lower and earned a lot of money. Depending on your lot size, of course. Of course, there's no guarantee of income. Your income depending on your work ethic and the time and effort you put towards studying, learning, and implementing your trading strategy. But yeah, it perfectly came up to 78.6 and then bounced off and started trending lower. Incredible. Okay, so now that we, definitely took a look at that, right? We want to now go down to, we want to make sure that we mark up the fair value gaps now, right? Because now that we're on the daily, we want to mark up our fair value gaps. Okay, you could do fair value gap markup on the 4-hour or the daily. So let's just do it on the daily. Let's mark up our fair value gaps, and got to open it up to take a look. And you see one right here. Make this a little more visible. Okay, so again, this wick and this wick, of course, didn't touch. So there's your gap right there. One gap. And look what it did. It came up and filled the gap and continued its journey lower. Okay, but again, it created another gap. So we're going to clone this and bring it down to this gap. Okay, so this, make this a little thinner for you. This wick right here, get my arrow. This wick right here and this wick right here are not touching, which is hence creating a gap. Okay, so we're going to mark that gap up. All right. There's your gap. Okay, but lo and behold, there's another gap underneath it. And we're going to mark up that gap with the rectangle. Here's another gap. So I'm, creating these or marking up these gaps to remind me that markets, the candles or the market has to come back and fill these gaps before it can go lower. Because these gaps are orders unfulfilled, because it happens so rapidly that there are orders placed in these areas that need to go back and pick up those orders and fill them. Okay, so I'll be paying close attention to these gaps going forward. So now we're going to go down to the 1 hour. Okay. Oh, wait, back to the daily. Okay, because in the daily, we got to mark up the last candle, right? Which is this candle right here, Friday's candle. Because what we're doing, we're anticipating Monday. We're planning for Monday right now. Okay. So this is Friday's candle. Remember, I don't really mind the color. I'm just looking to mark the high and the low of Friday's candle. And we'll be placing very close attention to that. And I also want to know where the middle is. Here's the middle. Okay, we're going to change the color to orange, of course. So Make it thicker, make it 4, and make it orange. Make it thicker, make it 4, make it orange. Oops. Make it 4, make it orange. Okay. And then I'm taking away the box, right? So this is Friday's candle. The high and the low. Okay. Alright, so now we drop down to the hourly. And again, same is true. What I said before. And I'm going to mark it out. I'm marking out the low. And I'm marking out the high. Top of the candles. Okay. We could stretch it out to Monday. Let's say Monday 12 p.m. before the start of Tuesday. So stretching that out like that, making sure this is Friday midnight. Friday midnight. So put this in your notes. Midnight to midnight. Okay, so that's Friday's area. And come Monday, I'm looking for. What am I looking for, class? I'm looking for a candle to break below the low. Then a pullback. Where's my path? Looking for a pullback and then a continuation. First scenario. Okay, same is true on the top. Alright, so this candle, I'm going to make it black for a bearish candle, right? So I'm looking for a close below the line, but a pullback, and then a continuation. And then the opposite, if it happens on the top, let's say over here, I'm looking for a candle to close above the line. And of course it would be green. Right? And then a pullback to that line for continuation. Those are two of the traps I'm setting for the market, right? These are my A1 setups. Next scenario is market pulling up to the line, bouncing off the line, right? Trending lower to get back to this line. All right. Next scenario, market is here, right? Right at this area. Bounces off the line to trend higher. Okay, so let me clarify that. Market's here, bounces off the line, and then makes his way back up to this line. Because remember this, when the market's on the bottom edge of your support, I'm going to call it support, you're looking for a break below, retrace back, a continuation, or bounce off your support and heads higher to resistance. Okay, the resistance is on the top, which is the ceiling. Support is on the bottom, which is your floor. Okay. All right. So those are the two scenarios. So 1, 2, 3, 4. That's all I'll be paying attention to. 4 different scenarios, 4 different setups. Okay, and that's what I'll be looking for on Monday. All right. And of course, the execution, once I get to these areas, will be done on the 5-minute. This is where I will place a trade on the 5-minute, is where I will execute the trade. But what do we need to do for gold? We need to set alerts. Bottom line, click it, go to coordinates. Go to your alert section, add an alert. We're doing a cross down. We're doing value. We copy and pasting that number. We create. Okay, so that's my gold crossing down the support, sending me an alert via email or by my computer. That way I could jump back into the chart and look for those candles that I told you guys earlier. Bullish engulfing, bearish engulfing, okay, or doji. Okay, now we're going to set an alert for the top. We're going to double click the top line. We copy and paste the number inside of coordinates. Okay, and we're going to add that alert to cross up. Value, copy and paste the number that we just copied, and bam, that's my second alert. Okay, so that's it. That's what I do. That's my new trading strategy. Hopefully you guys could mirror it, copy it, test it out for yourself. Okay, back test it, see if it happened, in the past, the same scenario, and then take the trade according to the direction of the market. Okay, right now, from what we saw with gold, the market is in a downtrend because of the break of structure. And if we go back to the weekly, we noticed that there was a break in structure. Actually, it was in a daily that we redefined it because of this low candle here. And that's what we're looking for. Okay, because we're below the trend line and we're looking for two scenarios. And these two scenarios, what we put alerts on, and I'll be jumping back on the chart. If my system sends me an alert, I'll jump back on the chart to see which direction I want to place my trade. Okay, hopefully, it pans out where I can actually place a trade. If not, again, another strategy is not to place a trade at all and just watch the candles, watch the chart, watch the market to see if there's an opportunity. And you do this for every daily candle. So when another candle is printed on Monday, I do the same exact thing. Another candle printed on Wednesday, I do the same exact setup. Another candle printed on Thursday, I do the same exact setup. So for every day of the week, I'm replotting out my chart the same way you saw me do on this video, and then I will plot my trades according to what I see and according to the alerts. Okay, so hopefully you guys got some value out of this video. I love creating these videos for you guys, but this strategy, wow, it helped me last week. I'm actually in 3 challenges right now, and I will definitely keep you guys posted on those challenges. I've already passed one of the challenges. I'm actually in a real funded account, looking to make a profit. Once I earn $2,000 in that funded account, I could ask for a withdrawal, okay, which is an 80-20 split, and I'll let you know when that happens. But yeah, progress is happening. You just got to be consistent. You got to be, proactive. You got to practice, and great things can happen. It can happen for you if you commit to understanding what you just saw. Okay, so rewind the video, play it over again, plot out your charts the same way I just plot out mine. This is free content. This is the sauce that'll help you cook. Anyway, with that being said, thanks for watching. Give a thumbs up if you appreciate the video. Leave a comment. Let me know what you guys want to, if you got questions, I'll address your comments in the comments section. go to my website. Okay, click on that link, become a student of this craft, join the academy, which is a CashX. And then once you join the academy, I will then take you under my wing and mentor you. And then we'll do one-on-ones on Zoom. We'll do some Zoom meetings, do some one-on-ones, and I will show you exactly how all of this works. I'll help you create a demo account. I'll help you create a strategy. I'll help you write down a trading strategy. I'll help you, become profitable in the market. It's going to take time, but once you learn this skill set, you can write your own paycheck. I'm still learning. There's so much to continue to learn, but with knowledge comes what? Profits, right? Profits. Okay, because you can't do the job you're doing on your JOB without first getting trained, then practicing what you just learned, then implementing what you just learned, and then doing it every single day, okay, to impress your boss. But guess what? They're not paying you what you're worth. Remember this. They're not paying you what you're worth. They're paying you what your job is worth and the position is valued at. So you have to decide how much you're worth. So you jump into the markets and you decide what you're worth and you shoot for that number. It may take you a year, 2 years, 3 years, 4 years, 5 years, but you decide how much you want to make inside of the market. Okay. So instead of, exchanging hours for dollars, because you can only make money when the clock is running on a 9 to 5, you come into the market, even if you're part-time, you come into the market and you place a trade, and then you set it and forget it like I just showed you. And if it hits TP, you add that profit to your salary. Okay. Eventually, at one point in time, I just don't know when, you'll be able to make more money in the market than you'll make on your JOB. But you have to build that skill set, right? You have to build that skill set. You have to practice, you have to implement, and then, share what you've, learned with others. Because I learned that when I start teaching others, when I start sharing what I do with others, I'm also teaching myself. All right, because now I could go back and rewatch this video and say, okay, what's missing, and what do I need to add, and what do I need to focus on? So this is why I do these videos, not only for you guys, but for my mental capacity of trading as well. So hopefully, if this is a career you want to pursue, you take it seriously, you treat it like a job, and you don't treat it like a hobby. Because if you treat it like a hobby, you make hobby income. If you treat it like a job, if you treat it like a business, you make entrepreneurial income, which is your rent money is in the market. Your car note is in the market. Imagine living debt free because you've earned more money in 1 month than you ever did on your JOB. Okay, or setting a target to say, okay, if I could make $300 in the market, that $300 would then pay for my cell phone bill. If I could make $500 in the market, that $500 will pay for my car insurance. If I could make $2,000 in the market consistently every single month, I could take that $2,000 and I could change my zip code. Okay, so you got to have a why, you got to have a dream, you got to write it down, and you got to set goals, right? Your goals are your stepping stone to hit your dreams. Without goals, you can't hit your dreams. Okay, so you got to set goals. All right, so whatever that number is for you, whatever that dream is for you, set a number and then go after it. Reckless abandonment, sleepless nights, taking notes, filling up notebooks of, your thought process, getting your psychology right, because 90% of trading is between your ears. You got to get the mental psychology of, understanding exactly who you are. Okay. And then say to yourself a couple of things that you don't violate, like don't overtrade. Okay. Don't revenge trade. Because making money can give you such a great high that you forget your trading strategy, or losing money could make you depressed. So you gotta eliminate the emotion from the chart, because if losing money makes you depressed, this is not for you. Okay, this career is not for you. Okay, because there's gonna be losses. So you got to get the psychology part of your mind intact. That hey, if you lost $20, that's okay. You can recalibrate, reset, go back and do it again. You blow your account, it's okay. You go back, reset, recalibrate, do it again. You never give up, because the minute you give up is when you failed. But if you keep trying, keep, putting your putting your boots back on, and you're still walking towards the goal, walking towards a dream, great things can happen, because you can't stop a man or a woman who has a written plan in place. You just can't stop that person that says, I'm going to be this, I'm going to get this, I'm going to do this. You can't stop that person, because no matter what you say, they still have it in their mind that they're going to be successful. Success for you could be different from success that I have for myself, but you have to write it down, right? The top 5% of the nation's wealth are goal setters. Are you a goal setter? Then you're part of the top 5%. All right. So with that in mind, thanks for watching. You guys have a successful trading week. Comment if you want to, and I'll be back on here next week with some more training. And, we'll take a look to see, because I'm going to pretty much make a copy or take a snapshot of gold. And then we'll revisit this next week, and we'll just, I'll take a look to see and show you guys what happened with the strategy next week. All right, everyone. Thanks for watching. You guys have a great one. I'm sorry that this video was so long, but I wanted to make sure I got this content out there to you guys. And then you can always rewatch it over and over and over, or fast forward to the parts that you want to just add to your notes, and then just go back to the charts and practice this strategy going forward. With that being said, much success to you all. Thanks for watching. Bye.